Ladies and gentlemen, exploring the landscape, we dissect the impact of cash burn, management shifts, and developments in the Chinese equity market. In this video, we will discuss the rewards that significantly contribute to increasing cash burn and ensuring certainty in sales, effectively engaging existing witnesses for repeat sales. We'll also delve into the management shakeup and what's happening in the Chinese equity market. It has seen a significant surge but has slightly retreated, and we'll explore what's happening in that regard. So first, let's talk about the heavy cash burn. As you may or may not know, you should consider it from the perspective of shareholders. So absolutely, the battery swap is NIO flagship model, isn't it? Many NIO owners purchase the car for battery swapping. But if we look at it from the shareholder's perspective, you're providing the battery swap service for free or just charging for electricity. The service fee, which is approximately 50 RMB per swap, which translates to revenue for NIO, has been acknowledged. This is free because NIO is very generous and providing it for free during the holidays. Truly, they're taking the work to new heights and beyond. All right, and no one else is really doing this work. You don't see Tesla service reps handing out snacks, but this benefits NIO owners. Almost a 100% guarantee that their next car will also be from NIO. Maybe their next car will probably be from NIO as well. So, you have a very high chance of a repeat purchase. NIO owners just like the brand. All right, but from a shareholder perspective, you should be making money, but you're burning a lot of cash, which I think is the reason for this. But of course, you should also make profits in the long run. You can't just give away things for free. All right, so as a shareholder, I have a conflict that they are giving all this away for free. But as a NIO owner, I like this. Let's go. And those waffles, those NIO Life waffles, they taste really good. So you have two sides to the same coin. Yes, NIO should be making money from swaps, but they don't make money in this holiday season. NIO is striving to be very accommodating, but as a result, there have been changes in management, which were announced today. Here is what they have announced. Mr. Eddie George Scarf and Mr. Nicholas Paul Collins have been appointed as new directors by the company board of directors, effective February 7, 2024. In addition, Mr. James Gordon Mitchell has resigned from his position as a director of the company, effective from February 7. Mr. Eddie George Scarf has been serving as the Chief Investment Officer at CYVN Holdings LLC since May 2023. He is the individual who decided to invest in NIO. Indeed, he invested a substantial amount in NIO, approximately $7.2 billion, and they are currently facing losses. However, they are there because they believe in the company. Undoubtedly, if they did not believe, they would not have invested in NIO. So they believe in the company, but they also want to get their investment back, just like all shareholders. Therefore, they have also been working as directors of 48 Limited and 47 Limited since June 2023, and as directors of CYVN and Investments RSC Limited since July 2023. Previously, from August 2019 to May 2023, Mr. Scarf served as a senior advisor for digital infrastructure at Mubadala. Before that, from August 2017 to May 2019, he served as the chief strategy officer at Emirates Integrated Telecommunications Company. So he's on board representing CYVN. And we know that in June, NIO is planning to expand into the United Arab Emirates. So perhaps he is also present there to ensure everything goes smoothly and maybe bring some changes in corporate decisions so that shareholders can benefit more. And I feel that the recent developments we are witnessing, such as the end of many freebies, the shifting of NIO points, the reduction in insurance levels to meet cost ratios and make things a bit more profitable, etc., I think they are all pressing buttons from behind. CYVN, they are pressing buttons. In my opinion, I don't believe that the CEO of NIO would actually do such things. They genuinely want to provide as many facilities as possible for the owners of NIO. So another very cool thing is that Mr. Nicholas Paul Collins has assumed the role of Chief Executive Officer at 47 Limited since January 2024. Prior to this role, Mr. Collins worked at Jaguar Land Rover from March 2015 to December 2023 in various capacities, including director of both Jaguar Land Rover Limited and Jaguar Land Rover Holdings Limited and executive officer of vehicle programs at Jaguar Land Rover Limited. Mr. Collins began his career in the automotive industry in 1993 and has extensive experience in global product development, product and business strategy, vehicle development, and launch through Ford Motor Company and Jaguar Land Rover. Mr. Collins obtained a master's degree in mechanical engineering from the University of Nottingham in 1998 and an MBA from Henley Management College in 2004. The company is pleased to welcome Mr. Eddie George Gulf and Mr. Nicholas Paul to the board. The company believes that their experience and expertise will be a valuable asset in their progress. The company extends its gratitude to Mr. James Gordon Mitchell for his support and service to the company during his tenure on the board. In particular, his presence has been invaluable. Another individual, Mr. Nicholas Paul Collins, brings extensive experience in the traditional automotive industry, especially in automobile gaming. And this is precisely what I believe NIO needed the most. Because you see, Lee Ben William Lee and Charlie Holm are innovators. They are visionaries. They are leaps and bounds ahead. But their background is not in traditional auto management. And even the people, including other management personnel, have no connection to traditional auto. And we are witnessing this especially with X-Pain. X-Pain has truly undergone a significant transformation, especially when they hired that woman who came from Chainin, who was previously the CEO of Chainin, and she truly turned things around. She identified many areas where X-Pain was spending excessively. She trimmed the fat that some directors at X-Pain should not have been there for and were only there to get X-Pain to pay more for parts, and she truly made a big U-turn for X-Pain. So in my opinion, while the vision of William Lai is necessary, there is also a need for someone like Nicholas. Mr. Nicholas Paul Collins needs to truly guide them on how traditional auto companies operate and how to set things up for profitability. This is our goal, understand? This is what we want, and I believe this is what we are getting. And these people will provide excellent advice for the top management team and truly guide them. Because if you are thinking 20 steps ahead, maybe you are not paying attention to what you are stepping on at the moment, and you might step into a pit. And if you are only looking ahead and not down, you might get into trouble. So this is the change in management that I truly, truly like. According to my personality, it will bring about some good changes. So then, what's happening in the Chinese equity markets worldwide? All right, this is from Reuters, and especially during the spring season, when the China market, filled with turmoil, rose rapidly. According to reports, the government intervened directly, and after the ups and downs in U.S. Treasury bonds yields, it stabilized this week. So the first action was all in China. Last month, we saw Chinese stocks falling considerably, down by as much as 20% in 3 months, and this amid controversies over foreign goods, geopolitics, and a domestic economy struggling with a shortage of resources, and the government is trying to make sensible decisions. The first action was all in China, but there, benchmark stock indexes set new single-day jump records of almost 2 years, with swirling rumors of regulatory crackdowns, concerns over government purchases, and issues looming over the Politburo. All this while President Xi Jinping reportedly decided to talk about the ailing market with finance regulators, according to Bloomberg. Regulators also announced further restrictions on short selling, and state investors also announced plans to expand their stock buyback programs. Many people are witnessing a sudden surge in blue chip stocks, with an increase of more than 3% on Tuesday, thanks to state-backed investors known as the National Team. This sudden reversal in emotional sentiment of investors seems more like the actions of large funds, pushing triggers and buying stocks. Meanwhile, sentiment in China remains quite bearish, with people still complaining about losses and everything else. So it was last night when Republican presidential candidate Donald Trump said he would reimpose tariffs on China if elected in November. And they could be even higher than 60%. And you're really seeing the end of globalization, aren't you? You know, the U.S. really depends on China. and by doing so, it actually harms the economy of both. And it's clear that this will hurt China more than the US. So this is really not a good situation. The good news is that President Xi Jinping is really taking control of the stock market situation, and he will try to fix things, which is very good. Now the bad news is that most of the money, big money, is buying retail, and retail doesn't seem so optimistic about it in China. And I think the only way to really fix things for China is if President Xi Jinping adopts a more peaceful and less confrontational approach, focusing more on trade and unity with Americans. Or if someone else comes along, like Deng Xiaoping or Hu Jintao, who actually support globalization and open up the country more. But this is just my personal opinion. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.